Good evening, everybody. Happy Sunday. It's July the 24th. Last week, the market saw a little bit of interesting activity early on, but not quite the momentum I think many were expecting. Let's talk about it. I'm your wealth guy. Let's talk money. Let's talk Sunday night market preview. All right, everybody. So, welcome to the channel. I really hope you enjoy what we have to say. And if you do, please don't hesitate to hit that subscribe button, like, share, but most importantly, comment, because things are really starting to get interesting in the markets and momentum could be getting ready for a shift. So, let's talk about it. Last week, the markets ended up sitting positive overall, but not quite the momentum that we were hoping to see, or at least some people were hoping to see. I certainly was not expecting it. And what I mean by that is early in the week, we saw a wonderful rally in the market, but the next day, the market failed to deliver a continuation. Moving 600 points in a day, and then the following day, even if it was up 100 points or relatively flat as the rest of the week ended up being, is a little bit disappointing, because that continuation would indicate essentially that we could see some upside momentum, which we did not get. We failed to see a little bit of a follow through here following I believe it was Tuesday's rally to the upside, especially since we finished the week last week or the week before with a little bit of positive momentum as well. Now, what makes it even more concerning, or I should say even more interesting, is that the European central banks at this point are buying bonds as aggressively as possible. And if you don't think what happens overseas doesn't impact our markets here, it most certainly does. And let me tell you another thing. The Federal Reserve, or the Fed in the States, and we've talked about it before, so I'm not going to beat this dead horse, is also doing the same program. Formally, no, but yes, they are. And I'd be very interested to see the balance sheet at the end of this month and even in mid-August, just to see how the Fed is actually managing bond buying and whether or not there's any quantitative tightening as they claim there is. Now, the one thing I will say is the fact that the markets didn't continue to rally aggressively to the upside, even with all this new cheap money entering the market via the new transmission protection instrument, as it's being called by the ECB, which essentially means a bond purchasing program with a no limit threshold. I would have expected the markets to be euphoric and running to the upside. Now, keep in mind, I have been saying for quite some time that I was expecting a little bit of a pop here. I wasn't expecting a run to all-time highs, but certainly a little bit of a bounce before we see the markets continue to pull to the downside. And the fact that we didn't see that continuation following the last rally early in the week indicates to me that there are still a lot of sellers. Another interesting thing to note is overnight, markets are not positive. Futures are sitting in the negative, and even tonight, yes, it's early, futures are still slightly in the red. Again, nothing serious, no major sell-off here in equities, but definitely still flat, slightly negative momentum. So that'd be interesting to see what goes on this week, because this week, earnings continue. But as far as economic reportings, it is a very busy week. On Tuesday, we have consumer confidence and new home sales. Wednesday, we've got durable good, pending home sales, the Fed interest rate decision, which I think most people, is safe to say, are assuming a 75 basis point increase. I know there were rumblings out there of possibly 1%. However, I think overall we're probably going to see a 75 basis point jump. Now, on Thursday, we've got the jobs numbers, and they have not been looking good. In fact, they're accelerating to the downside. Friday, we've got GDP. Again, this is just reporting on the second quarter. I am expecting a negative GDP return here. Again, this would just continue to reflect the recession sentiment that's out there, even though Janet Yellen has now come out and said that a recession can be avoided. At this point, I really don't think it can be. I anticipate that we will continue to move in that direction. I anticipate that even for the medium term, and as reflected in the inverted bond yields here, which have now been sitting in this pattern for roughly 2 weeks, meaning short-term bond yields are higher than long-term. So there is that sentiment that short-term will be a lot more volatile than long-term, and essentially potentially that recession. So just keeping that in mind, I think that this week the markets will probably be relatively flat. Even though we have earnings, I really don't anticipate the earnings are going to be have a broad impact on the overall market. Obviously, it will impact its sector. Obviously, it will impact that particular stock. But I think overall, the markets will probably be flat until we see what the Fed does on Wednesday. And I think if we get 75 basis points, which is where a lot of market people and traders and analysts are happy, I think it's not going to do any good. I think we're going to continue to see an acceleration to the upside in inflation, this money printing, and these little incremental steps and increases in interest are hyperinflationary as opposed to what they're supposed to be doing, which is reducing inflation. So again, just a quiet week, I think, overall for the early part before we get into Wednesday with the interest rate decision. And depending what we get there, jobs and GDP will affect the markets, absolutely. Now, taking a look at other markets, cryptocurrency did see a little bit of a bounce here. We did break 23,000, currently sitting at 22.5 over the last 24 hours. Are positive, at least that's for Bitcoin. Take a look at Ethereum, much of the same sentiment. It is positive overall. A little bit mixed right across the rest of cryptocurrency with a slight lean to the green over the last 24 hours. We could probably see a little bit of the support levels kicking in here. Not quite sure if we're going to see another pop this week like we did last week, but I do anticipate that we'll at least hold existing levels where they are. Taking a look at precious metals and crude, I think crude, although positive in this early trading session tonight, could see a little bit more potential to the downside, at least as far as recession concerns are out there. Once recession starts to dissipate, or at least that sentiment, if it actually does dissipate, you can see crude start to bounce to the upside as expected demand moves along with it. As for precious metals, gold and silver, gold is continuing to see a little bit of some positive sentiment here. Silver is still holding in the mid to high $18 range. Ideally, silver should see experience a little bit of a pop in the near future, and I don't believe that that's out of the realm of possibility to see silver jump back up to $20 an ounce. But for now, we are seeing a little bit of pressure even here early in the trading hours. But that's it, everybody. That's where I'm feeling for the week, and I will see you tomorrow at the opening bell.